Hey everyone, we'll just give people a second and then we can kind of get started. Okay, so we can say here that we Okay, are you guys ready? And then if you guys are, we can go over this and then set some conditions together before we start the week. If you guys could just let me know and then we can just kind of get started really quickly. So this was kind of the same thing, like we'd rather delay. We already know that we also have I'll wait for you guys to respond. I'm just going to assume you guys aren't ready since no one's answering. Hi. Okay. You guys can't hear me? Why? Can you hear me or can't? Can or can't? I just unplugged my mic. It should work. Okay. Okay, are you guys ready to set some conditions? If you guys are, we'll just do this really quickly because we only have 5 minutes till market opens. So I don't want to set the conditions after the fact. I'd rather do it before. So Bank of Canada is also set to have their final rate decision this week. And I think Bank of Canada was, I'm pretty sure the Bank of Canada was saying that they're going to not have any cuts, like it would just be flat. So meanwhile, Bank of Canada is looking to keep rates steady to close off 2025 at 2.25%, because Canada had a lot more rate declines this year than the States has. So we'll see. I feel like if Canada does have a cut, though, this can impact the markets that day, aside from the US, because Canada reports first. If the Bank of Canada, however, does have one final cut, this can create some volatility for the markets ahead of US rate decision. Okay, so we'll just keep that in mind. I think it's ahead of the bell. So this is just kind of some macro perspective. Weekly, early week conditions. Do you guys kind of like the early week conditions and then like midweek? Like, I feel like we already had an idea of 68.81 and then potentially the zone for like the weekly report, but midweek we knew that those odds decreased based on that 13-point reduction that we had. And it actually makes sense because you know how we said in the report that on Sunday that we had 13 points reduced off the week, and it was pretty obvious. That 13 points is exactly this. So it's so obvious that if they had broken, maybe the reason why they decided not to clear us higher is because they knew that the odds were pretty low and that we could maybe fail 68.18 again and make a lower high. So like I just kind of thought about that and I was like, oh, so maybe that would have been the lower high. So this is like the calculated 13-point reduction. Okay, I'll put this on the report. So I figured that maybe that's the reason. But this is also the same reason that they probably sustained 68.22 and 68.23 on this day here. So 683.625. Do you see what I'm saying? So that's good because at least they were able to give us like a hold right here, and probably the same reasoning too that they held the zone. Do you guys see what I'm saying? Right here. So do you guys want this in the report, or like I still think that this is pretty important because this is like the 13-point zone offset. So this is probably why they held the zone. This is probably why they held core. And I haven't really looked at it from like this sense of things, but there's that 68.92 we talked about. This is probably why they avoided 68.52, so this is good because 68.52 was our weekly support. Do you guys kind of see how that confluence is there? So they avoided 68.52 by 13 points, which that's good. But there was some risk if they would have broken beneath that back to 68.43, 68.42, which would have taken us right back to these closing points here from the second and the third. Okay, like these areas here. So let's just mark these really quick. I'll post this in the report and let's just set some conditions here quickly. Okay, we'll come back. I'll post visuals after. So I think for starters, the very first condition to start the week is obviously going to be that we want to try clearing 346 points from this open close. So that's going to be taking out 6,946. Okay, that's going to be the first condition, is we have to take that out pretty early. Is everyone on the same page? So this is going to be my first condition to start the week, is when they do come back there, they have to clear that. So this area here is 69.06, and that's why they stalled that. They stalled it exactly. Clear 69.06, 346 point range from November 21st open. That's the first condition. Second condition can be, obviously since they closed around here, 354, 356 points. Usually if you break 356 points, that's going to be the 381. So ideally open above 381. That's going to be the very, very first. This is ideal. Like we didn't have a bad close, but it wasn't like the perfect close. Like if they would have closed it a tiny bit higher here, I think that would have been a bit better. I don't know why this isn't deleting. Anyway, just ignore that 69.18. So this would have been a little bit better. Second condition is going to be open ideally at or above 6881. Okay, that's the 346 point range off lows. Oh, perfect. Okay, so our first condition's met, guys. That's, sorry, 356 off lows and 256 off prior week's lows. We'll kind of go through this together, but there it is. You guys see that 256? So 256 is 68.81. Do you guys need this visual, or are you guys okay without it? Because it is in last week's report. So that's a perfect open. So I would say now, because of that diagram that I drew, like, you know how I said we have to have like that, what do you call it? Like that continuation up. That's why it's going to be important that they maybe early on try holding these core ranges now. Like, where did they test here? See, they tested 8.6 right away, but they didn't get to 8.8, so that's interesting. So maybe see if they can hold 68.81 almost immediately, and then try. I think they have to take out that 6992 tonight at a minimum, but ideally maybe sustain the 7.1 to 7.8 area this time. I would prefer that they avoid the means, since they already basically tested this, because you just saw what I just said, right? So like this was 5.8 hold, this was our 6.6 hold. I feel like at this point in time, if they come back to 5.7, 5.2 can trigger 4.4, 4.3. Does that make sense? Like what we just talked about, like this right here, this. Okay, so if we already know that, then we probably want to just avoid that. So that our first condition is met. Retrace 68.92, 68.99. Overnight would be ideal with 69.06, 69.10 area being a big overhead. This overhead though, because now we have time and we have multi-flips, how do I make this make sense? When they stalled 69.10, 69.18 last time, we had no more time, okay? And it wasn't like, that wasn't like their first time testing it. Does that make sense? Like, whereas this is like, we have a few days. And so even if it tests 69.10, comes back down, but sustains, it's fine as long as it holds and then comes and takes out 69.10 in one, or 69.10.20 in one single shot. Does that make sense to you guys? Like in terms of understanding price action. And there's a specific session where I remember they did something like that. Can't remember what it was, but basically it was like they kind of kept us stalled, and then but when they came back, they took it out with like force. So it's, that could be a scenario. So like for instance, if they decide they want to maybe come to here, okay, test here, test 69.09, test 69.10, but then stall, but then let's say they come back and hold 6881. Are you guys listening? Or like this area here, are you guys understanding this? Then they could hold core and then come back and take this out. So this wouldn't be like the worst case scenario. If they did something like this, where they stalled 69.10, 69.08, but they take out the minimum ranges first, like 69.06, the 69.10, 12, 14, okay, like these areas here, and then came back down and sustained here, okay, then it's not the worst case if you come back and break the 69.20s. Do you guys understand what I'm saying? It's kind of relative to where you sustain, because in the past what ended up happening is they didn't hold. That was part of the issue, okay, is when they did this in the past. Let me see if I can give you guys an example. So when they failed, okay, like here, this area in the past, you guys see this? You see how they tested 69.01, okay, and then they came back down. They kind of failed at 8.1, and then they failed 7.8, and then they had the hold at 5.7, okay? So this is why 5.7 right now is so important. 5.7 is also very calculated, okay? And why failing 5.7 can give you an immediate fail of 5.2, and this is exactly what happened last time. And if you pay attention, they took it right back from 4.4 all the way back to the neutral zone, and then they just kept, you know, taking it back to 6.744, so on and so forth. So this could imply the same volatility. So the difference this time would be if they stalled but took it a bit higher, okay, let's say here, it's not necessarily above here, but it's still above this structure here. Are you guys listening? Just so, because this is kind of like a very complex structure break if they did it like this, which I think this is what they're going to do. If they did something like this, but then brought it back, but had a better structural hold this time off like 7.1, 7.8, 8.1, your odds are increased. Does that make sense? That you could still end up coming back and getting this kind of a move here, and then that basically takes out these structures in one single shot. Okay, is everyone on the same page? That's one scenario that's pretty likely that could pan out if they ended up doing it like this. Another scenario that they could do, this would be a more, not bearish scenario, but I guess more range on both sides. What area did they leave for us this week? Which areas did they leave open for us this week? For downside, guys. We're done talking about upside. What do they leave open for us for downside? Yeah, so they've left 6788. They've also left 6820s, right? We already know that the big core areas to lose, though, are the 6720s. We already talked about that. Losing that is what could take us back to lows. So this is kind of a bigger area to lose. But generally speaking, we have room back to here, 60. If they break 5.4, okay, let's say 5.2 and 4.3, the very first range is around here, okay? They have an odd of making a higher low around 4443. That would like hold the 3236. That's one odd. We just measured that. Okay, that could be like one odd there. But if they fail the 6844, let's say, area, that's what could take it back to 6820s. Okay, this is one probability. If they did something like this, you'd want to like basically come back and do something like this. So this is another scenario that we can look at. This is another core scenario. I don't know if these help you guys. A bigger, deeper move would obviously be like maybe something like this. Failing to get back maybe over like 68, 66. Do you get what I'm saying? 68, 71. Or like maybe you don't get high enough. Maybe you get to 6671, but not 7881. Whatever way you want to look at that. And then that causes like a deeper move back to like maybe 6788. Okay, this is one scenario, right? Depending on where you stall here though. Otherwise, if like they stalled and they don't break even to, let's say they get a core break, sometimes going higher takes you lower. Okay, does that make sense? So sometimes if you break a bit higher, but not high enough, let's say 6783 or something, or 6873, okay? That can get you a failure of the zone, 6788, and then you can push to like this 6770, 6771, 6778. Do you guys get what I'm saying? That would be a deeper core retracement if you retrace core, but not high enough. Okay, that's one scenario that could pan out if they, and even this could maybe delay you. So this is what could maybe cause that delay till December 16th, okay? Because then maybe it's just too deep of a core move, or you'd have to have some really big break. So this is what can get you back to like the 6830s, 6820s, and then maybe from there they can get you back to net flat on the week, back to 6881, and then you reset, okay? I'm giving you guys every single scenario possible this week because these are the only scenarios that they could basically end up doing. And hopefully this is helpful. Okay, so this is still a core move, but then ends up making you flat on the week, delays you till next week. Okay? Unless they obviously have like some sort of like mass core break and then you clear 69. This would be a little bit harder and it would kind of just depend on how much time we have if they gave us like a bigger push. Another scenario would be that they instead stall maybe areas that are not really core, like kind of zone ranges, okay? Like maybe they stall 68, 91, 92, 88, okay? And then that causes a zone to zone break. So then maybe closer to like 6788, 6790, 6790, 93. Does that make sense? This would be like more of a zone break, and then it keeps you zone bound, okay? And then maybe you're just like stuck in the zone pre-fed, okay? Whether it's, you know, staying stuck in this zone down here, right? Around the 67 or 68, 10s, 20s, 30s, or maybe even getting back to the channel, like maybe to 6838, 6844, like this range in here, okay? This is one scenario before they release catalyst on Fed date. This is if they want to keep you in the lower channel area. And another scenario would be that they have enough strength to maybe push you back to this zone, okay? Ahead of Fed release. So it'd be like kind of like this, right? And then maybe that can get you back to the channel. So having a zone to zone break can still get you in either way. And we already know that those are usually the cases with things like that. I think the best thing for this week, though, based on what they've done, is I would prefer the first scenario where they kind of just hold. They kind of just hold early on, maybe hold like the 7-1, 7-8, and then try testing, you know, this upside range first. Because if we can get back into this zone before Fed release, then our odds of getting all-time highs this week and breaking them increases, right? Where we've opened already is giving us an odd of doing what? Now that we've opened above 346 points. We have an odd of taking out all-time highs now, right? And doing what? What do we have an odd of doing? yeah, maybe getting to these 70s, right? So I feel like we have a pretty decent advantage so far, considering they opened us at 6883. Okay, so let me just delete a bunch of this so it's not super cluttered. Like at the very least, they could potentially get us there. But I think for that case to be probable, they probably have to hold upper core areas. Does that make sense? Like I feel like for that scenario to play out, they probably have to hold 7-1. Okay, and like 7-4 for this to be the case, because they'd have to make it to this 69-20 area probably as early as tomorrow, but no later than the 9th, right? It probably has to occur before Fed release so that they have odds of getting, like, even if they just digest the zone on that day and then bring it to the channel or something before, at least it gives you odds of retesting highs and then taking it out as early as the 10th, right? So this is one case scenario if they did something like that. So far, I feel like that's going to be the highest probability if they hold. If they don't start holding as early as tonight, then we know that the odds start becoming more likely that they're probably going to keep this constricted a bit, like maybe between the areas that we discussed, right? Like if they come back and retest 6-6. I already know if they come back and retest 6-6, we're already at risk of going back to 4-4. Does that make sense? Like testing 6-6, I already know they're going to probably try testing 5-8 because now there's not really anything in between until 5-2. Does that make sense? Like failing 6-6 now should take you to 5-2. Failing 5-2 should take you to 4-4, right? Failing 4-4 obviously would give us the retest of getting 68-20s, right? And then from there, that's going to be the odds of the zone. So a lot of this is going to depend on what they do probably in the first hour, because I feel like if as they start failing these 60s early, then I'm already going to imagine that they probably have an odd of getting downside to start the week first, and then maybe that's going to constrict us a little bit to our lower zone, right? Which basically is the same thing as like kind of resetting this scenario in the first place. Remember how they gapped us on the 27th? On Monday, the 27th is linked to this date here. So, and on multiple time frames too. So I figure that maybe they're just going to try resetting this here. So like if you look at it like this, just in kind of like a simple context or format. Okay, kind of like the battle of getting into either of these zones, mostly based on how early or how late they can get this into the channel. So 60. Oh yeah, I guess. Because usually before Fed, we're based in a channel, right? So, and this was that channel that created that volatility in the first place last time, was because they gapped it in this channel. And right now we're kind of just hovering in between at core ranges. So usually when you do that, it's because market odds are a little conflicted. They're kind of like giving odds of both sides basically, okay? So does the color coordination help you guys a little bit? Opening in this white area can get us to this white area. That's like the most dumbed down way I can put this, okay? This can get us to this area here, okay? But a lot of it's going to depend on how early we sustain this white range in here. If they sustain this area but then end up like taking it back to this green range, that's where maybe we'll get constricted to like this area in here, okay? Like this, holding this area in here can still get us back to here, okay? But it would, and it could still get you an all-time high retest, but maybe just closer to the 50s. Does that make sense? And so far, that's how this has been played out, but I feel like that's mostly because they wanted to delay things until this week and potentially next week. So there's still some odds that we have where we could potentially flag, right, ahead of the 16th. And then we've got some odds where they could still engulf. So the 14 day is one of them. 14 days a really nice potential outside bar. And this runs until the 12th. So the final trading day on this is going to be the 11th. Okay. And so far, if you're just looking at this from a structural basis, okay, do you guys see how, do you see how they still managed to close above 6878 and above 6872? Okay, so far this is already progressive. Okay, so, and the odds on this give you time until the 11th. So it would kind of give you that extra window post FOMC. Like, you know, sometimes FOMC doesn't really run, but then you get the post decision price action. Like, that could be a probability if they kind of keep this a little bit stuck or delayed, or maybe just take it like zone bound or whatever the case is. Maybe take it to the channel that day. That would be one scenario that they could do, is like something like this, where maybe they don't give full range until after Fed, okay, if they wanted to engulf, and maybe they only take it to like 5.8. Okay, maybe we don't get upper core ranges, but we get a new all-time high. This would be the case, I think, if they compressed us on the actual Fed date. Does that make sense? And usually they would do that if they keep things a little bit stalled early in the week. So it's like if we don't re-enter the zone or get there early in the week, then those odds are probably more likely to happen. Where, let's say they don't get us there until the 10th or something. Like, let's say we meet these conditions on the 10th where we enter the zone. Does that make sense to you guys? But then we don't get a all-time high retest that day, but let's say we test 69.20s. That can still get us all-time highs this week. Okay? I just don't think it can get us expanded highs. Okay? So these are going to be all the potential scenarios we have. Obviously for downside, we already discussed that if they did the same thing down, they fail these areas here, right? Especially the zone area. You know, there's odds of going, I don't really see them taking this all the way back to 67.44 or 67.20s, mainly because they opened above this 346 point ratio. Okay. Like, I feel like if they're doing this, then I highly doubt they want to take this all the way back down without at least trying to like retest this upside area first. Does that make sense? Like, they're already so close that I highly doubt that they're going to want to take this down back here before trying to get those breaks of upside. And same idea, like this hold from last week's lows, like prior week, would take us back to 69.71. Since the 28th was a very, very important structural day too, we could definitely measure some odds off the 28th. Okay. So like from, for instance, like the 28th, lows should be the 129 to 132 point ratios. Yeah, they are. So the 28th does take us back to these highs, and that's why I'm saying like there is some odds that maybe they stall. Okay, that's just linked to the 28th. And the only reason I'm saying that is because if we're using our 4-day, okay, this is the 28th through the 4th through the 10th. Do you see what I'm saying? So it kind of is going to depend on how much range we get, especially considering this is now the third bar here, and this runs till the 9th. We have to kind of just monitor what kind of range we can get on that specific day, especially the 9th, in relation to highs. Does that make sense? So technically speaking, the 28th lows can take us to the highs. The 28th, okay, and this day here are linked to the 9th and 10th. If we measure the range from the actual final date of that candle, which is the 26th, these could be what is more probable. And that's why they could maybe keep it stuck until after Fed release. Does that make sense to you guys? Try to think of your structure in terms of price, okay, and time. So this date is linked to the 9th, okay? That should help you, and I hope that turned on some light bulbs for some of you guys. This should help you understand odds, okay? Conditions, meeting range by a specific set of time. So if I can get to 6909 at a minimum, okay, and look at this. This is so crazy accurate, right? Or even like 6907, 6908 breaks at a minimum by the 9th, then I should have some pretty decent odds for the 10th. Ideally, okay, like off high ranges or closing ranges, you'd want these to be the 128 point breaks. Okay, do you see the confluence at 69.58 off the 26th close, 28th open? Okay, so I think a lot of this is going to be relative to basically the kind of breaks they can give us ahead of time. Because I would imagine even these are like the 66 point breaks. Yeah, they are. These are probably 88 point breaks in here around the channel. This is 107 points, right? And 107 points, you guys already know this could imply like stalls sometimes, right? 115 points. If they were to break off highs, that's how you can get those core ranges. So you see how like the max ranges align with those 69.70s, just like they would have on a 346 point break right here. Do you guys see the confluence? Hopefully you guys can see the confluence with this. So this is either a 128 point break off the highs. Okay. Right here. There's one way you can think about this. And think about the time structure with this. Or you can think of it from like these lows, because the 24th is also linked with that date. And that's why that could be a like an expansion type scenario. That's if they were to break early enough, right? Because then you're breaking off these candles highs. Okay, and off the full max range from the 28th, I would bet anything that this is 6788. Okay, let's see. Off the 28th highs, this should be a 6788 break. Yeah, it is. Do you see what I'm saying? That would get you a zone entry. That's where you could start getting like mass expansions. I don't think that we have high odds of that this week, but it gives us those odds for the 12th through the 16th. Okay. But do you see how that can get you at least upper core areas like 69.85? Okay. Do you see what I'm saying? This is off the 28th. 132 points could get you 69.89. Do you see what I'm saying? Whereas if you're measuring off high range and 6.3, that's how you can get like the bigger zone breaks, like closer to like the 69.90s. I think we're more correlated to, and that's for FOMC. So does that make sense that like that 28th candle is linked to upper core areas and to potentially a new zone? Okay, so what would that be? 698, 6981, 6988, 6982, or 6992, sorry. And that makes sense because that date and those ranges are linked to December 10th Fed date. Okay. And that kind of makes sense because what could Fed do technically? What could rate decision bring us? And obviously it's going to depend on where we're trading that day. And ahead. Yeah, range or volatility. So I'm going to keep this, I'll put this in here because I think it's good that we have all scenarios. But does that help you guys like comprehend the correlation between time and price in odds? And if it helps you measure certain dates with each other, then do that. Okay, so if you want to measure the 9th odds based off the 26th, then do that. If you want to measure the 10th odds off the 28th, then do that, okay? Or you can even measure them like off the breaking structures, right? So like November 11th, okay? So that would be like the 10th, November 4th and 3rd, okay? So then that way at least you know that, okay, the 24th and 23rd, the 29th, because the 29th would be the final day, the 29th is, and the 30th are all-time highs. Okay, so this is all-time highs, the 30th. The 30th is linked to the 10th. So you technically can trigger all-time highs as early as the 10th. Does that make sense? So it's like this is in correlation to one another. They're kind of like based off the same sort of like theory. So this date is linked to that date and vice versa. So, and I haven't actually measured any ranges off the actual all-time high candle, but maybe it'd be something as simple as like, okay, if you can retrace 44 points back from highs, okay, that's probably the break of 69.10. Yeah, it is, okay? Or you can look at it as like the 33-point break. I would bet money that that's the 69.20 break. Yeah, it is. Do you see what I'm saying? There's two ways you can do it. If you're doing it off a downside candle, measure down. If you're doing it off an upside candle, measure up, or whatever direction you're looking at retracting. And then you should be able to start seeing a correlation with one another, okay, and how they're linked to each other. Especially if these two are related. Like this would also be the same thing as like, you know, clearing 107 points probably. So, and once you get closer and closer and closer, the 22 is probably the top of the zone, 6932. 17 is probably going to be the channel. And then your final ranges are probably like in the channel. So there's also, do you see how there could also be odds of the channel that day? Okay, so that should help you guys at least understand like what kind of odds you have or probability. Same with like the 11th and 10th, right? These days are linked with here, okay? I noticed that on the 11th and 10th, we didn't get the best closing price, okay? Like we got a bit of a better breaking range on these days here on the 3rd and 4th. So this kind of helped structure a bit, okay? Hopefully that makes sense. So try to understand it from that sort of perspective, because then at least that way you'll have an idea of maybe what you want to look for. Same with this. Okay, November 5th. So that means the 4th, which was the final day before that candle closed, right? Like if we're looking at this, that would be this bar right here that went from green to red, right? And this bar in here from highs, this is including highs. So that range includes highs from the 30th till the 4th, right? And this is from the 4th till the 10th. So basically from the 4th till the 9th. Okay, so if we're looking at that, that means that the 9th is also correlated to the 4th. Do you see what I'm saying? I don't really know how else I can explain that. You have to kind of think about it as like the day before or the day ahead. Okay, so the 9th is correlated to the 4th. Or sorry, the 9th is correlated to the 4th. The full range here so far from the 4th to here is 118 points. So I would say at the very least you'd want the 4th to break 128 points in range by the 9th. That's that 69.14, 69.18 retest. Do you see what I'm saying? Like that's the minimum condition, and it makes sense because those are linked to those dates. Look, isn't that crazy? The lows on this measured up would mean that your 9th condition has to break 69.10, 69.14, 69.18. Basically, it has to break these structural highs. That's 128 to 132 points. And from an open closing range, that could take you to the channel. So far I'm seeing a lot of odds that they could take this to the channel ahead of Fed, okay? So, and maybe rewatch this stream just so it can help you, because sometimes I feel like visuals are kind of hard to work with without some context, even if it's like written context, right? So all of that being said, maybe these ranges in here, 128 points, 32 points, they're probably netted to highs. Do you see what I'm saying? Like, look, they net to highs. That's at 69.55, like where you could just break highs by a little bit, close to 69.55, 69.57, 69.58. Okay. The 5th is linked to the 10th. Do you see the correlation again? We just looked at how the 28th is linked to highs for the 10th. Do you see how the ranges on the 5th are also linked to the 10th and are also linked to highs? None of that's a coincidence, okay? It's actually a pretty cool thing. So, but I can already tell that odds of hitting highs as early as the 9th, are they high or are they low? What do you guys think? I would say that they're low. There's more concise odds with the 10th, right? Unless you had like some sort of like mass expansion, because if you break off the range from the highs, okay, from the 4th, let's say, like the minimum range you'd want to break would be like back into the zone here, probably close to 69.99 or 68.99, 69.02, right? 69.07, 33 points in range, maybe like 8.5, 69.20, okay. 44 points is probably back to the upper zone. 66 points is probably back to highs, right? Because if you broke as early as the 9th, is that not a lot of range? So think about it, Wildcater. Think about the range on this day, okay, in comparison to this day. You'll have to rewatch. Right, Cater? Because if you hit like a full expansion as early as the 9th, okay, you're listening? And let's say you actually measure like full range from that day or something. Yeah, your range would be insanely high. Do you get what I mean? Like you would be breaking 7,000. So that's why I'm saying like those odds they're not that high, because then it's like a lot of pressure. Does that make sense? Based off these ranges. Whereas like this day, the 5th, is linked to the 10th. That's more realistic. Do you see what I'm saying? So then your conditions for the 8th have to have way more pressure. Do you get what I mean? Like you'd have to meet these conditions as early as the 8th. Okay? To have that kind of odd for the 9th. Do you see why sometimes I say, oh, if this is met as early as here, so if they were to meet 128 to 132 points as early as the 8th, basically retest 69.10, 69.18, as early as the 8th, not the 9th, then yes, you have pretty high odds that you can come and clear the zone, okay, as early as the 9th, and maybe make it into the channel, okay, but then that would give you odds of maybe getting like to 7K. Do you see what I mean? It's like not only just breaking highs, okay, but maybe where's the 66 point interval? 66, 68. Okay, you see how that it could, right? Because that would be 66, 68 points from here. But do you see the pressure? Because if you stalled 66, 68 points, what would that mean? And that's why I say they might not do it that way, because the pressure would be insanely high. What would that mean? I'm making you guys use like so much logic today, because you guys should start looking at things in a much more complex way. What could that mean? If they were to bring this to the zone, to these areas, 128 points from the 4th as early as the 8th, meaning they test highs on the 9th, what could that mean? And this is very important, because stalling 66, 68 points would be What would you do? What's 69.50 and 69.52? Is that a break of highs? That's a lower high, okay? You do not want to make a lower high. Do you understand how that would apply pressure? Do you see where the pressure would come into play? And I'm not saying that you necessarily have to get the full range, but you'd probably at the very least want to break a 66 to 68 point ratio. Does that make sense? Like, I don't think you'd want to stall 66, 68 points. And it's crazy because that high range or opening range or whatever from that day is pretty close to where they opened us. So there's a lot of confluence there, okay? Like maybe at the least you can get lower core ranges, right? Like maybe close to like, if you get like a 88 point break, you can get, I would bet money that this is back to that 69, 71 to 72 area. Okay, do you see that? So it doesn't mean that you have to necessarily get like 7K, but could that give you an odd of getting 7K as early as the 10th maybe? If 69.71 is met that day? Do you see what I'm saying? Like maybe you won't get the full 128, 132 point range because that might be kind of crazy before Fed decision. But do you see how like that could easily set you up for getting these core ranges? Remember how these are like breaks, like 107 points, 115, 128, 132. Do you see what I'm saying? But that could maybe get you like a 88 point break, which would get you back to 7.1, which again is the same thing as getting the 346 point break from those previous lows, right? Or the 425 point break from these ranges here that we talked about. That's the extension. Remember how we said that there's, when markets break, they usually break 410, 415, 420. It's the same thing. Do you see what I'm saying? It's the exact same thing. It's the exact same thing as these open closing ratios, okay? Of breaking that 410, 420 points. So hopefully that makes sense. So that way your brain is prepared that if we hit the zone as early as the 8th, we can get all-time highs as early as the 9th. But if they get all-time highs as early as the 9th, we have to break it. Otherwise, that's going to imply volatility. Does that make sense? Because you're also then stalling a 66 to 68 point ratio from a calculated point in time. I don't know if that helps you guys understand this a little bit better. I hope it does, because that's the third bar. And your fourth bar ratio is a period of potential what? This is going to help you guys really, really understand this if you're actually paying attention. So think about it. If you stall highs on the 9th, and then your candle flips its fourth bar on the 10th, you can have massive expansion or exhaustion, okay? So do you see how you could expand if you were to clear that on the 9th? That would make sense. Then I wouldn't be surprised if we got 69.72 or even 7K, because I'd be like, oh, okay, that makes sense, because we could get 7K before the 16th, as early as the 10th, but through the 10th through the 15th. Do you get what I'm saying? Like through these dates. It would be the 10th, 11th, 12th, 15th. Okay? So hopefully that gets you guys a better idea of that, because that would be an expansion type scenario. Whereas if we stall 69.50 on the 8th, or on the 9th, sorry, technically that's a lower high, but it's also a very calculated lower high, and it's also a candle flip. That's how we could maybe see some slight exhaustion during that period. Do you get what I'm saying? That would be the scenario where they take us up before Fed just to take us back down. Okay? I'll put this recording in the weekly report just because I feel like maybe it'll make more sense for some people, because I feel like people always ask me, how do you know how this is going to flip? Well, this is how. Do you get what I'm saying? Like, you have to have conditions set, and they have to be in correlation to specific dates, structure, time, range, on a wider frame, smaller frame, wider ratios, smaller ratios. It has to all make sense. So I already know that the 9th has a law of pressure, okay? And if it's not ready to meet that pressure, it's better off kind of just staying closer to to here. Do you know what I mean? Like, and then just wait till the 10th to get to 69.20s. So this would only be the case if I would say they give us some sort of like expansion break and then stall highs. And from a very basic approach, it makes sense because it would be a lower high beneath all-time highs before Fed decision. But do you see how this is the more like calculated way of looking at it and the reason why, right? Because I feel like people always miss the why did that happen or why or whatever. Do you know what I mean? Because sometimes you can make a lower high and still break higher because that range that was lower was technically calculated enough to still give it a probability. Does that make sense? Like, meaning, like, if let's say this was, I don't know, 68.81 and you hit, where is it? Let's say this was 68.81 and you hit 6943, 6944. And it makes sense. Like, the market's so smart. Listen, guys, if you hit 69.44 on the 9th and this was a 68.81 close, you could technically still take out highs. It might look like a lower high, but it's low enough to still give it a probability. That's like that whole, you don't want to go higher if it's not high enough, and you'd rather come back lower, okay? Does that make sense? Right? So like this would be a really good example of that. Like if you had something like this. And then from like a very base approach, that makes sense because that's also stalling in the channel. And usually if you stall in the channel, it's because the market hasn't come to its decision yet. Isn't that so cool? So like a 6881, 6878, 6871 range is linked to the channel. So that kind of gives it an odd to stop and think about its next move before it happens. That's assuming that we had measured off this range instead of like the 6884. Okay? Do you see what I'm saying? Like, assuming that was the case, then at that point, that would have been fine for markets to make a lower high in the channel. Okay? And then give it that odd to break on the 10th. I know this is a very complex way of looking at the market, but I feel like these dynamics are so important, especially into like major events like this. Okay? So hopefully this helped you guys feel more prepared. I'm going to leave the report basically kind of linked to like ranges, base conditions. I'll attach the video because I feel like that's going to make more sense. I think we'll just focus on like very base conditions to start the week, like where we opened, retracing this area, probably early on, right? Because that's going to help avoid back testing 6858, 6852. Do you get what I'm saying? So ideally open at or above. Retrace 6892 overnight would be ideal. That's a big overhead along with 6914 through 6918. If we're able to break into the zone, so 6888, as early as the 8th, there will be pressure to retrace 6910 to 6918 as early as the 9th, with the 9th having the earliest odds of all-time high retest. Okay, the 9th also implies correlated risk to November 4th, which is a measured range of 6950 to 6952, aka a lower high. So pressure on this specific interval is high. Okay, so we would much rather stall lower than stall highs on this date to keep odds favorable for the 10th. Otherwise, fourth bar exhaustion can be applicable. I don't know how to word that really. And then if the conditions are met as early as the 8th, okay, so like 69.10 or whatever, 69.18. The 9th would have odds to clear highs, 69.53, and potentially break to 69.71, 69.72. 69.71 is an extremely calculated area this week, right? This is linked to 346 point interval breaks and 410 to 420 point ranges. Median range, which is a likely scenario as well, is that we can break all-time highs but stall closer to 69.55, 69.58. Confluence in this area. The widest mass expansion scenario is breaking 6988, 6999 or 92 as early as the 10th if conditions extend on the 9th. 9th also has high odds of channel digestion ahead of FOMC if zone ranges are met in time. If we have flattening range ahead of FOMC, we could instead see continuation on the 11th. That was that condition that, remember how I said that if they say, like if they for instance get partial range on the 10th, but like maybe just nest the channel or something, I think that would be the case if they maybe just kind of kept this digested here, and then there would be that continuation on the 11th. That would kind of just be like this bar. I think the easiest way to understand this is like you don't necessarily have to break the highs, okay, before the 10th, but at the very least break 69.18, okay? So okay, so we can see you have to meet 69.20s ahead of the 10th, but potentially stall channel, okay? So like 69, I don't know, 38, 6948 area. Does that make sense? And then your window after the 10th is what could give you the odds of like that continuation. And another way you can think about that too, other than it being the 4th bar, is what was that time frame, guys, that had this, okay? Do you guys want me to write that in there so you don't forget? This is also linked to the potential outside bar engulfing on the 14-day, okay, which flips on December 12th, and that is what can apply upside pressure for December 11th, aka a post-Fed move. Okay, remember how sometimes you don't always move during Fed? Have you guys ever seen those flat FOMC dates? And then they have the move after? Okay, this structure is what would suppose that. And you have to pay really close attention to the ranges. Like the ranges that we see ahead of the 10th and on the 10th are going to give us those odds. Trust me, okay? I think that's probably enough for the week. I think like we already know, so like weekly structural support will be linked to 68.66 being lost, as this can imply 68.52 retest, and that is linked to 6842, 6844 if we sustain a higher low there above 68.36. We can basically have channel to channel odd, that would be like the 69.30s, 69.40s maybe stalling instead of highs. And that is what can keep us delayed. Another scenario would be the loss of 68.43, 68.44 is what can allow for those deeper core retests to 68.20s and 6.788. Max downside for the week will be for ranges 6.7, 6.6, 6.771, 6.778, 6.781. I would prefer to avoid entirely. I don't really want to touch there, but if they didn't meet those conditions and they stalled, this scenario increases only if we are unsuccessful. Oh my god, I forgot how to type. Unsuccessful in reclaiming the zone 6888 as early as the 8th. Stalling bear neutral zone ranges on the 9th. Okay, so like 6888 to 6899, 6910, 6914 areas. Okay, hi. I think that's probably good. You guys can obviously rewatch this if you wanted to, just to kind of have it go with this, but I do have to get going. I'll post some overnight notes. I do want to maybe make sure that we have it noted in here. Overnight, we probably want to hold. Where is it? Okay. Overnight conditions are to ideally sustain core ranges above 6.7 or 6.871, 6.878 to increase odds of avoiding a 6.866 retest and reclaiming the zone as early as tonight. Okay, let me end that there. Is everyone at least kind of prepared for the week? Like, I feel like this should at least give you guys like a decent idea of what you can try to look for. Maybe even a better interpretation of like price in correlation to time and structure. Odds, how high, how low they get. Why some days you get these massive breaks, why some Fed rate decisions you don't move at all, why some rate decisions you get mass expansions, why sometimes you move after the fact. These are all like really important in terms of understanding market dynamics. And I feel like the number one thing that I have personally never seen anyone teach is understanding dynamics, which is what helps you predict odds. And the most important thing in trading is predicting your odds, right? Because that's how you're gonna like apply risk, right? And the only way that you can make money in trading is by putting on risk. You can't put on risk if you don't know what your reward is or your odds are, right? So give this a second watch if you need to. I'm going to shut down the stream right now, and then we'll see what ends up happening this week. I'm prepared for any case scenario. I'm obviously going to be monitoring overnight, morning, opening range, just to kind of see what kind of odds they're giving us. So far, it seems like they're trying their best to hold that 7.6, 7.8, 7.4 area. I feel like they need to, at the very least, retest at least 8.8 and 91 by overnight session, at least to try giving like some odds that we're going to have these zone entries for the 8th. Okay, I will see you guys tomorrow, and I'll be around later this evening with some overnight updates.